If money is evil, then that building is hell. This is the most obnoxious group of money-hungry, low IQ, high energy, jackrabbit, f***ing wannabe, big-time, small-time, talking, bothersome, irritating bunch of motherfuckers I have ever had to endure for more than 5 minutes.
All right, Ripple XRP holders, welcome back to the channel. So with XRP sitting at 55 cents right now, $29 billion market cap, we see Bitcoin up 23% on the week at a $679 billion market cap. Solana rallying 38%, Cardano 14%, Dogecoin 17%, and then Chainlink up over 50% with massive announcements taking place in the crypto market right now. How long will this rally last for? When will a correction come in? And what is the World Bank doing to reevaluate and revalue XRP, backing it to gold? Will that happen at $25,000? There's a lot of conspiracy theories out there, but I want to talk about what's happening on the Bitcoin to the US dollar price chart. When will Bitcoin see a correction? The World Gold Council's gold reserves by country, the reason why central banks are buying more gold than ever before, a realistic price prediction for gold, some evidence that could support inflation being a plan to completely destroy the dollar, what the gold reevaluation account is, an official document from the World Bank talking about the decline in correspondent banking, the global takeover of blockchain technology and CBDCs, the collapse of Wall Street's biggest banks happening right now, what the CEO of BlackRock has to say, some more nonsense from Wall Street clown Jim Cramer, another massive partnership taking place for Ripple. We got some clips from the former treasurer of the US as the board of Ripple and the CEO Brad Garlinghouse. And also we're going to compare the Bitcoin dominance to Ethereum and when to expect a massive breakout for the altcoin market. Plus I'm going to share some altcoins that I'm currently watching right now that I expect to make some massive moves for this bull run cycle that you do not want to miss. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, then you know what to do. Take the like button and just tap it in, give it a tippity taparoo. Do it for grandma because we're going to beat the SEC and we're buying grandma's house back with XRP. Let's run it. All right, bull runners, welcome back to the channel. So let's talk about XRP to the US dollar price chart and what we're looking at right here. We can see a double bottom trend reversal, the low for 11th of September of this year, and also retesting that low on the 9th of October. We see this neckline right here and this resistance that XRP broke out just recently with that Bitcoin rally, and it's currently hovering at it right now. If we can hold this support at roughly 55 cents and we hold it as support, the next stop for XRP is all the way up at 67 cents if we can break above 58 cents. Because this resistance that you guys can see all the way back from September of 2022 is like a stone wall for XRP, and this is going to act as a massive zone of resistance. So it's not exact to the T, right? Because you can see these candle wicks right here from the 30th of August to the 1st and the 4th of October, but ultimately this zone right here is what I'm watching. And if we can hold this zone as support and Bitcoin remains bullish, as Bitcoin consolidates sideways, and if we see a push up from Bitcoin, I would expect a push up from XRP. If we don't hold this zone, I would expect XRP to come all the way back down to about 45 cents, this upward trending support line right here. So technical analysis for XRP is kind of irrelevant because we need to look at Bitcoin and we need to see zones for Bitcoin in terms of when a back test would take place. Because as you guys can see right here, Bitcoin was in this range from 12th of June all the way until the breakout of the 13th of March, right? The low for Bitcoin was all the way down at $15,000 in November of late 2022. So what we saw a breakout right here in March, Bitcoin pushing all the way up to the resistance of May. We formed a high for $32,000, consolidated sideways, retested the resistance, which is now support, as a back test, consolidated sideways, and now we're seeing another breakout right now. So the real question is, how much higher will Bitcoin go before we see another back test of the support right here, roughly between $30,000 to $31,000, $32,000? Well, that's a good question. Let's look back to 2015 and let's see what happened right here. As you guys can see, we saw this range take place from the low of January of 2015 until the breakout of around October of 2015. Bitcoin rallied up all the way to $500, and then we saw a back test happen almost instantly in November of 2015. We then saw Bitcoin range sideways, consolidate for an extended period of time until roughly about May of 2016. Bitcoin broke out again upwards of $770, and then we saw another back test take place right here in the August of 2016. And we saw the same thing happen again. Bitcoin broke out roughly in December of 2016, followed by this back test in January of 2017. And then Bitcoin saw more rallies, followed by massive 20 to 40% corrections all the way up to the top. So what we're looking at right here is we look at Bitcoin break out of a range, form a new range, back test the previous range as support, consolidate sideways, and then work up, break out to a new range, rapid rally. It happens in a matter of 24 to 48 hours where you see these, 10%, 15% rallies, and all of a sudden everyone's FOMOing in and they're buying while Bitcoin's rallying, and then they buy the peak of the breakout, and then all of a sudden Bitcoin starts correcting down, it comes back to back test, and then they're sitting on their Bitcoin and waiting, at like, let's say $35,000 or $40,000. So how high will Bitcoin go? Nobody knows until the correction comes. But one thing we can be sure of is that a back test will most likely take place. Now, when will that back test take place? It could happen in November, it could happen in December. Bitcoin could keep pushing upwards of $40,000, $42,000, $43,000. If we open up the indicators and we type in the RSI right here, where we currently are, we're sitting at 88 on the RSI. So we're in overbought territory right now. Now, that doesn't mean that the RSI would immediately come down, because as you guys can see all the way back here, if we look in January 17th of this year, Bitcoin rallied up to $21,000, saw a very mild correction down to $20,000, pushed up to $24,000, mild correction down to $21,000, pushed all the way up to 25,000, and then came all the way back down to the 200 moving average. And so on the RSI, we just saw lower highs being formed on the RSI, lower lows being formed on the RSI, while the price was rallying up. And so this was a deviation right here, showcasing that the bulls were losing momentum as the RSI was forming lower highs, whereas the price was forming higher highs for this deep correction right here. And then when the RSI dipped down for that deep correction all the way down to, it was like 28 oversold territory, plus we're at the 200 moving average, then the next breakout took place and then formed a new range right here. So I would expect something similar to take place for Bitcoin, where, for the RSI right now, we are at the peak for the RSI. This minor correction that's going to take place for Bitcoin, might bring the price down to like $32,000, $33,000, nothing too crazy. And then we just kind of push up a little bit higher while the RSI forms lower highs and just kind of works around this range right here. And then when we see, a massive dip back down, potentially the 200 moving average over the next few weeks leading into November or December, that could be the back test of this range right here, down to $30,500 to, $32,000 right here. And then we would see a spring from, 30 or lower on the RSI out of here for the next breakout. And then the next major breakout would take place 2024 with the ETF news. Now, we're looking at Bitcoin to the US dollar right here. If you want to zoom out even more macro and you want to go on the daily, and we want to see is this is like the first major breakout from this bear market range right here from May of 2022 all the way to July of 2023. This is a very pivotal breakout point right here. So Bitcoin is just breaching like a whale coming out the water right now, and we could see an even bigger rally to the upside to test the high of the dead cat bounce right here of March of 2022, which is like $47,000 to $50,000. We could come up that high before we see a correction on the other side. It's anyone's guess, but it's safe to say that right now everyone is bullish on crypto, BlackRock, because of BlackRock and what's happening with these ETFs. But you also have to be very careful chasing pumps like this if you're planning on day trading. If you're a long-term holder, again, not financial advice, don't buy, don't sell anything. This is all educational purposes only. But here's some macro market news to look at for the long term that makes me more bullish on ever before. So going to the World Gold Council and talking about the gold reserves by country, it's no secret that central banks around the world are buying up more gold than ever before. In the first 3 months of the year, central banks bought a combined 228 tons, the most ever seen in the first quarter, World Gold Council data revealed. So this follows up on what was already a record year back in 2022. So during the bear market for crypto, Well, 1,136 tons of gold worth $70 billion were added to the bank's reserves. So they knew something that the average retail investors didn't know. And what is that? Well, that could be that they are planning on reevaluating the entire financial system to back the new global reserve currency by gold. Could that be what's happening? We'll compare that to the 450 tons bought during 2021. That represents a whopping 152% year-on-year increase. So while they're buying gold, what was happening to the economy? Well, the Fed was raising interest rates. The fiat currencies were getting drastically destroyed, and the pace and consistency at which central banks are now accumulating gold, as far as World Gold Council can tell, is unprecedented, given they've mostly been selling throughout history. But the recent transactions trend, in particular over the past 30 years, illustrate a dramatic shift in the official attitude towards gold. Because back in the early 1990s, and 2000, central banks were continuously selling off gold as strong economic growth during that time rendered gold bullion less attractive than currencies in many places and the stock market. And when we look at the Dow to gold ratio, this 100-year historical chart, anything above 15 is bearish for the Dow and bullish for gold. Anything below 5 is bearish for gold and bullish for the Dow. So we're currently at 18 right now, meaning that it is not a good time to be in the stock market. Now, when we look at the gold reserves for the top countries across the globe from the year 2000, we can see that the United States had about 71,799 in millions of dollars right here. Germany was next, France was next, Italy, Switzerland, Netherlands, Japan, Portugal, Spain, United Kingdom, and then where was China? Well, China was all the way in 12th place in terms of the amount of gold reserves that they held. Now we fast forward to 2022, you can see that China has climbed all the way up to 6th place. And the United States has even added more gold than ever before as well too. So what could they be preparing for? Well, if central banks are buying gold and central banks know that the currencies are collapsing, they're preparing for a reevaluation. So when we talk about a price prediction for gold, well, we can see this triple top right here, and gold is most likely not going down. I mean, if gold's going down in value, then central banks are making the biggest mistake in history, but I don't think that's going to take place. If you guys think that I'm wrong there, then let me know in the comments below. If you are bullish on gold, and also I'm going to share what this means for XRP and what this means for crypto as well too, as a flight to safety. That's what they're preparing for. And so if we draw the Fibonacci retracement tool from the all-time high all the way to the low, an extension on this for a 4.236 would put gold at about $3,500 per ounce. 3.618 is 3,300. 2.618 is 2,800. $2,376 is a 1.618. So lots of people are predicting 3,500 per gold. Lots of people are predicting $5,000 per gold. We've seen some crazy predictions of a reevaluation up to $25,000 per gold by 2030. Could that be possible? Well, China is burning through its currency reserves as billions of yuan flee the mainland, and Japan prints mountains of yen debt to create inflation, thereby the conscious devaluation of its citizens' purchasing power. So this is being done on purpose. And Saudi Arabia has been ditching the US dollar to broker deals and trade using the yuan, and the US government holds an incomprehensible $33 trillion in debt. It says 19 trillion right here. This was back in 2016. So within 7 years, we've added an extra $14 trillion in debt. Imagine what's going to happen over the next 7 years. The gross debt is projected to go over $50 trillion. So where was the price of gold in 2016? It was all the way down at $1,072, all the way up of $1,300. So since then, gold has rallied over 97%, almost 100%, whereas the dollar in every country's currency has dropped in spending power. So when people asking if the value of the dollar is going down in value, what other country's fiat currency is safe? The answer is none of them, because this has been planned for well over a decade. Jim Rickards, in his recent book titled The New Case for Gold, he shines a light on the way out for these dysfunctional entities, saying if you devalue it against gold because gold is money, it's not the kind of money that can be printed by a central bank, but with gold, everyone can devalue their currencies at once. It's 8th grade math. To derive a per ounce dollar figure at what gold needs to be priced to restore public confidence and jumpstart inflation, central bank goals, Rickard suggests the following formula. He says, first you take 40% of the global money supply, then divide this figure by the official gold holdings of the world central bank, which is 35,000 tons, and you get $10,000 an ounce at a realistic gold reevaluation price. This is what Jim Rickards is saying. $10,000 an ounce is realistic. That's not any hopium. This action would stop deflation, a central bank's worst nightmare, dead in its tracks, and they might not even have to reduce the money supply. So other thinkers, including Antal Fatek and Hugo Salinas Price, have toyed with the gold figure of between $10,000 to $50,000, and even setting a $20,000 price prediction for gold as a realistic figure. So you guys might be wondering, well, what does that mean for crypto? What does that mean for CBDCs? And if a gold reevaluation happens to reevaluate gold at like $10,000, $20,000, $25,000, whatever, you will be able to quickly go to your local coin shop and pick up, a handful of bullion coins as gold starts rocketing in price. But think again, most likely what would happen is the supply would be gone. Gold will be in such short supply that only the central banks, giant hedge funds, and billionaires will be able to get their hands on any. The mint at your local dealer will be sold out. The physical scarcity will make the price spike even more extreme than 1980. So the time to buy gold could be now before the price spikes and before supplies dry up. And I'll tell you this much, a little while ago, I accumulated some silver, and even the supply of silver is drying up as massive institutions, hedge funds, and billionaires are accumulating more silver than ever before too. So here's how the gold reevaluation account works. Number one, there's the initial valuation. When a central bank acquires gold, it initially records it on its balance sheet at the purchasing price or the historic cost. And then number two, there's a reevaluation. If the market price of gold increases significantly, the central bank may choose to reevaluate its gold reserves, so it adjusts the value of gold on its balance sheet to reflect the current market price. So the positive difference between the original cost and the new market cost is credited to the gold reevaluation account. And then there's the amortization. If the market price of gold subsequently decreases, the central bank may choose to amortize or write down the value of its gold reserves, and the negative difference between the original cost and the new market value is debited from the gold reevaluation account. So what these central banks are preparing for, and the reason why they're buying more gold than ever before, is they're preparing for a reevaluation as gold goes up in price. Now, there's no guarantees there, obviously, but this document came out from the World Bank, and it talks about the decline in access to correspondent banking services in emerging markets, trends, impacts, and solutions. And so banks are getting congregated. The smaller banks are going out of business. The money from regional banks is going into commercial banks. And when I search Ripple and even XRP on this document, it says the third group of fintech approaches to the de-risking issue consists of attempts to redefine the existing correspondent banking architecture, often by using cryptocurrencies as bridge assets. In this framework, financial institutions maintain liquidity only in their local currency and the bridge asset, with cross-border settlements occurring in the bridge asset, aka XRP. A number of different bridge assets have been proposed, from Bitcoin and Ethereum to product-specific cryptocurrencies such as XRP, promoted by Ripple, or Lumens, promoted by Stellar, so that's XLM. Such efforts need to be treated, however, with caution, obviously, but Ripple, the model focuses on commercial cross-border and interbank payments, combining with cross-currency fund settlements. Ripple allows for a move away from establishing upfront correspondent banking relationships towards a more dynamic approach. Now, why would the World Bank, if they didn't want blockchain or if they didn't want XRP, why would they put the words towards a more dynamic approach in their document? This approach identifies a path for the flow of funds from a sender in a particular currency to a receiver in a particular currency through a series of participating institutions that offer services for that currency. This method can lead to a better discovery of prices for foreign exchange transactions and to expand access to such services for smaller remittance companies, so small and medium-sized enterprises and businesses. Ripple's own currency, XRP, is actively traded on several cryptocurrency exchanges. Ripple also operates its own exchange structured as a network described previously, in which the top currencies actively exchanged are CNY, USD, JPY, and the Euro. In addition, other cryptocurrencies like Bitcoin and Ethereum are also actively exchanged. Now we go to this other document, the World Bank Group of the Korea Office Innovations in Technology Note Series. This is titled Environmental Implications of a Central Banking Digital Currency. Right here it compares Bitcoin versus XRP versus cash versus like Visa and MasterCard, and you see Bitcoin in terms of electricity consumption per transaction. Bitcoin is at 700 in kilowatts per hour. Ethereum is 30. XRP is at 0.0079. Paper Cash is at 0.044, and then Visa is at 0.0008, 0.0006. So what would Visa and MasterCard most likely want to use to save electricity? Would they want to use Ethereum at 30, Bitcoin at 700, or XRP at 0.0079? So XRP is a clear winner. And as banks see massive money coming out and they see massive appreciation in the crypto market with these ETF approvals, where do you think the flight to safety is going to go to?
This rally is way beyond the rumor. I think the rally today is about a flight to quality, gold or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
So just recently, 4 of Wall Street's biggest banks have recently plummeted to levels not seen since the devastating March banking crisis. And the year-to-date losses are staggering, with a ranging 15% to 24%, causing significant concerns for investors and the overall market. Inside of Citigroup, down almost 15%. Morgan Stanley down over 16%. The Goldman Sachs Group down over 13%. Bank of America down nearly 24%. These aren't just some small regional banks, guys. These are massive, massive banks. So when I listen to the clowns up at the top of Wall Street like Jim Cramer saying stuff like this,
I think that crypto, I sold all my crypto. I announced everything on TV, what I did with crypto. But I would not touch crypto in a million years. And I think that everybody who owns these various coins, Solana, Litecoin, I do think you're an idiot. Mr. Bitcoin is about to go down big.
And then you look at the chart and you see when he says this and after that the exact opposite happens. It makes you think, who behind the scenes is paying this guy to paint an opposite narrative to the media companies? Well, the fact that he just mentioned JP Morgan Chase and Jamie Dimon has been talking negatively about crypto to preserve his investors' capital that is invested in Chase so they don't pull money out of Chase and put it into crypto projects. It's pretty easy to see that someone like Jim Cramer is not the type of person to follow for financial advice. Now, don't follow me for financial advice. Trust your gut and do your own research, but I'm just bringing you the facts here so you can make up your own educated decision. Ripple has chosen Uphold to provide enhanced crypto liquidity capabilities to underpin its cross-border payments infrastructure for multinational companies. So here's what the Uphold CEO posted on LinkedIn. And Flip the Chain just said the recent partnership between Ripple and Uphold seems to be solving the problem of issuance of XRP to the institutions. Currently, because the lawsuit is based off of institutional sales now, everything else is pretty much settled. Other than how it was sold to institutions, Ripple's customers can't purchase XRP from Ripple directly. Exchanges currently do not have enough liquidity to source XRP to institutions. This is where Uphold comes into the picture. So this is massive, massive news. And David Schwartz just said, we're still figuring this out. We don't currently have on-demand liquidity related sales with the US Nexus, and not being able to do so is not really a huge deal. We can still do on-demand liquidity in the US so long as XRP is never sourced from Ripple. So once these institutions get the green light and they're able to flow the liquidity into XRP, then we could see some massive moves being made when you least expect it.
I'm Rosie Rios, former Treasurer of the United States and current board member of Ripple. So blockchain is here to stay. It's not going anywhere. And so it's not just how to facilitate commerce. There are other applications, whether it's NFTs, whether it's, selling real estate, whether it's, any type of financial ledger that can be recorded for posterity's sake. This is here to stay. And it's important and incumbent upon the government at every level, whether it's local, whether it's state, whether it's national, to really give some thought as to how those applications are going to benefit them and benefit everyone. But I think what's most important is, what are those guardrails? What are those tracks that we can lay down in order to move forward in a way that really blazes the trail for future growth and future opportunities that we don't even know are there yet?
Finance businesses today in a few different ways. And I think one of the challenges for the industry has been to focus on solving real problems for real customers. And Ripple, obviously, from its earliest days, focused on the problem around cross-border payments. That's a point of a lot of friction as measured by speed and cost. And by focusing there, we've been able to have a big impact on that, relatively small piece. But I think over the next years, you're going to see many financial transactions where a middleman sits, a middle transaction, an intermediary. Those will get removed, and we'll use blockchain and other digital asset type technologies to remove that friction. And I think all of society will benefit from improving the efficiency of those systems. I think you'll see that. Certainly, you've seen it in securities settlement as an opportunity. The financial transactions around bonds, around derivatives, a lot of these things take a while to settle, and the friction associated actually holds back the industry. Insurance is an industry I think you're going to see touched. Trade finance is an industry that really Ripple, some of our customers have invited us to participate in. And you've seen experimentation around identity in real estate and title management. And these are all examples where I think it's so hard to predict where this will go, in the same way that 25 years ago, when I first got involved in the Internet of Information, I never could have predicted on my smartphone I'd press a button and I'd have a car picking me up minutes later. I think this will permeate lots of different parts of our society.
So one of the main areas that this is going to permeate into regular society is into people's investment portfolio, starting with Bitcoin and Ethereum and then bleeding into the rest of the altcoins. So when will we see a massive altcoin rally? We're seeing it happen right now with some projects like, Chainlink, Solana, Dogecoin, the top projects, but then there's these other projects that are still down over 90%. When is the massive amounts of liquidity going to flow into the medium caps and the micro caps? Well, how this works is it starts with Bitcoin first. We see Bitcoin's dominance rally up, and then we see Bitcoin's dominance cool off while Ethereum makes a breakout after that. So one thing we're looking at is the far left-hand side of the chart. Bitcoin's dominance has climbed from 39% back in August of 2022 to 54% currently right now as we push up higher. And Bitcoin's dominance was previously at 73% in December of 2020. So the next resistance for Bitcoin's dominance is roughly 57.7% if we see Bitcoin push up further, and then we see Bitcoin's price outperform Ethereum. Now, this simply means that Bitcoin is generating the majority of the market cap inflow in terms of liquidity compared to Ethereum. It doesn't mean that Ethereum can't grow. It just means that Bitcoin is outperforming Ethereum and the rest of the markets. So when we look here in the middle of the chart, we can see Bitcoin sitting at $34,737. Well, Bitcoin has broken out from this resistance that it had from July of 23, April of 23, and also it was resistance during the bear market of, May to June of 2022. So with Bitcoin breaking out, we haven't seen Ethereum break its previous high of April of around $2,100. Ethereum's currently at $1,791. So could we see a breakout for Ethereum when Bitcoin's dominance start to cool off? I think that could happen. And then that's when we see massive money start to flow out of Bitcoin into Ethereum, and then people use Ethereum on decentralized exchanges like Uniswap and other DEXs to trade into altcoins, because the majority of altcoins are built on Ethereum. So Ethereum is then used for these layer 2s because Ethereum is a layer 1. So Ethereum's next breakout would push Ethereum above 21,500 bucks and could push Ethereum all the way up to $2,500 right here, with Ethereum currently sitting at 1,791. So we need to see Ethereum hold the 200 simple moving average. Bitcoin broke above the 200 moving average. Ethereum is doing that right now. So if Ethereum can hold this moving average in yellow, I would expect Ethereum to see a massive breakout within coming months. So with that being said, some altcoins that I'm on the lookout for to see massive appreciation, no guarantees obviously, but VeChain is one of those projects. VeChain is currently sitting at a $1.3 billion market cap. We saw this falling wedge formation right here. It's currently breaking out right now. Over the past 7 days, in the past 1 month, we went from 0.016 to 0.018, and I think VeChain is drastically undervalued. We look at the all-time high for VeChain, it was 23 cents. So we're sitting below 2 cents right now. And as you guys see in the psychology of a market cycle, where does it look like we are right now? I mean, we're just in the start of the disbelief rally. We just made it out of depression, anger and depression stage, and now we're going into disbelief. So when we look at the chart right here on the left-hand side, we can compare VeChain to USDT Tether, and on the right-hand side, you could see VeChain compared to Bitcoin. Now, what this means on the right-hand side is VeChain compared to Bitcoin. because Bitcoin is generating the majority of the money right now, the liquidity and the market cap, and all eyes are on Bitcoin, virtually no eyes are on VeChain right now. And so one key support to watch is, 1, 2, 3, 4, 5, 6 Satoshis, 5.4. The next support down is 4.4. The next support after that is 3.7. So even if VeChain continues to drop in comparison to Bitcoin, at some point I would expect VeChain to see a massive breakout from this falling wedge right here. And so with VeChain breaking out, if I were to draw the Fibonacci retracement, we could see that a 0.382 would put VeChain at 11 cents, 11.6. A 50% would put it at 15 cents. A full retracement would put it back to the high of 28 cents. And generally in a falling wedge, the price target is a high. Now, how long that takes, I personally don't care. I think leading up to 2025, VeChain is a great project to keep on your watch list. Now, another project that I'm looking at is Cetify.fund. This project has a lower market cap. This is a micro cap. And one thing to be aware of, guys, is these micro cap projects like this are very, very risky. So do not buy them, okay? Just watch this for learning purposes only. But a project like this sitting at $37 million market cap, if this project were to see, let's just say $100 million flow into it, well, $100 million flowing into Bitcoin would barely move Bitcoin a few percentage points. Whereas $100 million flow into this, would put it at like a 3, 4, or 5x. With the all-time high sitting at this one at $15, it's currently at 68 cents right now. Similar price chart as VeChain, where you see we're just getting out of the depression stage right here. So when I look at the chart for this project, it keeps forming lower highs, lower lows. Now, we're all the way back down to the low of June of 2021 after this project launched. And how this works for most of these projects is when they launch, they see a rally up followed by a sell-off, lower lows, lower highs, we form a low. We look on the RSI, we're very low on the RSI. We're below 50. We're close to 40 or 30 right here. We see a break above this descending resistance right here. If we see a break, I would expect something like this to take place for this project. If we see a break above this descending resistance, I would expect it to kind of consolidate down for a little bit further, maybe retest this low, but above this downward trending resistance, and then we see a spring out of this going into the next rally for Ethereum. When Ethereum starts to rally, watch Ethereum, okay? When Ethereum starts to rally, then I would expect a lot of lower market cap projects that are anywhere between, $10 million to $100 million to start to see massive money flow in because these institutions start to look at these projects. Another project to look for is Veracity, VRA. It's sitting at 0.005 with an all-time high of about 7-8 cents for this project. It's at a $60 million market cap. So when we look at the chart for Veracity, it looks very bearish right now, but that is what whale money looks for. And we see this symmetrical triangle right here. And also we saw this falling wedge. We broke to the upside of this descending resistance right here. We're still inside of this symmetrical triangle. So one thing to watch for is either a break to the upside or a break to the downside. If we break to the upside of this descending resistance on this symmetrical triangle, I would expect Veracity to rally. Now, on the contrary, if we just kind of consolidate sideways and we see a break to the downside, followed by a close below the resistance of 0.0035 right here, I would expect it to fall down to 0.002. If Bitcoin is retracing and Ethereum seeing a sell-off, I would expect that to bleed into Veracity for one final test of this support of 0.002 that you guys can see back from December of 2022. If it hits this level right here, I'll personally let you guys know if I'm accumulating this project. Now, again, don't buy it, don't sell. Some of these projects, yes, I do hold. That doesn't mean that you should, but I'm going to share with you guys some projects that I'm just currently watching. Another one is 1inch. This project was massive during DeFi summer. This was a decentralized exchange next to the likes of PancakeSwap and Uniswap. It's sitting at 28 cents right now. $298 million market cap. The all-time high for 1inch was $7.48. It's sitting at 28 cents right now. It's dead. Nobody's watching this project. All eyes are on Bitcoin. All eyes are on Chainlink. All eyes are on Solana. All eyes are on these other projects right now. And because nobody's watching projects like this, what happens is you see price patterns and chart formations like falling wedges like this. Lower highs, lower lows, and then all of a sudden, we see something take place on a chart like this where we see a break of this descending resistance followed by further consolidation to the downside. Then we see a spring off of this. A lot of these charts have the same patterns, guys. We look for lower highs, lower lows, and then we wait for a break of the descending resistance right here, followed by further consolidation to the downside. It might not even have a retest. It might not even have a back test. It might break, and then we just see a pop from right here, and then we just see it start to retest the resistance of, like $1.85 to $1 as the next range within this zone right here, which acted as support back in March of 2022. So what I'm looking at on the chart is very, very predictable. It's very predictable because, over the next few months, I expect Ethereum to see some type of momentum from Bitcoin, that liquidity to flow. And then you see a project like Chainlink. Well, Chainlink is one of the first ones to see the rally. So this is a good sign that altcoins, the majority of these altcoins that have strong utility, strong fundamentals on the back end, and also did very, very well during the last bull run, doesn't necessarily mean that they're going to be the showstoppers for this next bull run, because there's more projects, and there's even going to be more projects launching that a lot of VCs are going to be looking for. But some of these projects that are still making massive moves and development behind the scenes are going to see some good momentum, Chainlink being one of them. But I would not be chasing a pump like this right here. Yes, I do hold some Chainlink, but I'm not buying Chainlink at $11 right now, up 56% when a retracement is most likely coming, even though long term, yes, I do think Chainlink could retest its all-time high of $50. I think it's very likely. There is no guarantee, but I think very likely Chainlink is going to do amazing things right here. But looking at the chart for Chainlink, I talked about this. I said if we break this downward trending resistance right here and we break this horizontal resistance, which was the high of June 6th of 2022, also the wick of October 28th of 2022, if we break this and hold it, Chainlink's next stop would be about $12 to $13.50 before we see something like this take place for Chainlink, a retracement, a back test, followed by extended consolidation period for Chainlink, and then another push to the upside. So why would I buy Chainlink right now with the potential that Chainlink is going to see a back test of this range that it held for an extended period of time? I mean, you look at how long Chainlink was in this range for until it broke out, 497 days. And so the longer the range of, support where it consolidates within a range, the higher the pop, but also the high likelihood that it could come to back test that range as support before breaking out even higher. And so I would expect a back test. For me to accumulate more Chainlink, I wouldn't be selling other projects and buying Chainlink on a pump. That makes no sense, right? Because Chainlink, on the RSIs encroaching above 70, I would be looking for projects that have yet to rally, like, 1inch, like Veracity, like Cetify, like VeChain. These are the projects that I'm looking for. So if you guys want to know which projects I'm bullish on and you want to see a list of my entire portfolio on what we're holding for this up and coming bull run as money flows out of Bitcoin and into the top utility driven altcoins, then all you need to do is go to bullrunners.com, click the button on the page, put in your best email address. It's free to sign up. You'll be subscribed to our video newsletter. You'll also be on our early bird list when we launch our financial education platform, and you'll be able to discover our best ways to make money online without any previous trading experience, because we like to give you the best information to help you prepare for the worst that's yet to come in this economy. And the worst is yet to come, but you are going to be ready as we back up our trucks all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind, because we believe the spending power of the dollar is going down in value. That's a fact based on inflation, blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together, we're going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.